All right, let's go ahead and get started. My name's Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm that covers disruptive tech for a broad audience of retail and institutional investors. Today, we're going to talk about a firm called Virgin Galactic, and it was several years ago that we last looked at them. Now, start a bit by talking about the leadership behind Virgin. This gentleman here, Sir Richard Branson, is not so well known in the States, but is a phenomenally successful individual. So he has about 60 different businesses that he's built over his lifetime, all while doing some really amazing things. He has a probably difficult to rival track record in terms of his ability to succeed at whatever he does around the globe. So here you can just get some idea of the various businesses that he's started. Now, the other thing about Mr. Branson that you need to take into account is that he really loves to take risks. So this book here by Richard Branson, it's called Losing My Virginity. And he says, How I've Survived, Had Fun, and Made a Fortune Doing Business My Way. Now, this gentleman is probably at the top of the list of people that I personally admire, and I would, want to invest in any venture that he had just based on his name. But when you start looking at investing in a more pragmatic manner, you don't invest in stories. So an investment in any company that Mr. Branson builds is certainly an investment in his story. And you can see some of the amazing things that he's done. He's said to have had 76 near death experiences, and he's set all these world records doing some real crazy stuff. Absolutely admire the man, but also need to recognize that not everything that he starts is going to be administered with a lot of realism. So he has some very grand aspirations. Now, when you take the grand aspirations of Mr. Branson and then you couple them with the special purpose acquisition company of the king of SPACs, then you have something that is potentially risky. Now, some of you probably recognize this gentleman. We always joke and refer to him as Samir Nainanajar, who is the fictional character in Office Space that nobody can pronounce his name. So we always refer to him as that, and nobody seems to even really notice. But he's the king of SPACs, and it's argued that this Galactic SPAC was probably what kicked it all off. And you can see this chart. This is an older chart from Bloomberg, but it looks at the plunge of SPACs that this gentleman has participated in. And as you know, SPAC sponsors, they make off like bandits. It doesn't matter what happens afterwards. They're the highest on the reward list. So he's done very well for himself. He was recently in the news because he supposedly said something derogatory about the Uyghurs. That's not the white kids with the baggy pants. Uyghurs are a ethnic minority in China, and all this gentleman said was that the concern about their persecution is low on the list of corporate America and capitalism in general. You don't see Apple pulling out of China because of that. And he said it's also low on my list of things I worry about. And he's absolutely right. So the media chose to condemn him for that for whatever reasons. But what they should be looking at are all the SPACs that have followed this first SPAC and that have lost retail investors an incredibly large amount of money. So of the 84 disruptive tech SPACs we've covered so far, around, let's say, close to 90% of them are below their offer price. So let's bear that in mind. And this particular SPAC is very guilty of promising something and not delivering it. So we went back and pulled up their SPAC deck. Fortunately, they filed it with the SEC. It's always going to live there. And you can see here the projections they made. So last year, they were expected to have brought in $210 million. Well, where was that going to come from? Here's what they said they were going to do. So in 2010 or 2021, they were expecting to have flown 115 flights and taken 646 passengers to space, all to bring in $210 million in revenue. Well, what did they actually do? Well, they flew around 4 flights based on the last earnings call, and they brought 4 passengers to space. So what you can see here along the bottom, this would be the average ticket price for the supposed flights that they were going to have to space with passengers. And right now they have a backlog of 600 people who have paid, let's see, $80 million in deposits. They say that represents $120 million in potential revenues. So first in, first out, these individuals need to fly first. So first they've got to clear that queue. So we're a bit puzzled why they're listing the average revenue per passenger so high along the bottom there, because the tickets that they've sold are certainly not around $300,000. Now, each flight that they have can carry 4 tourists and 2 pilots. So they're going to need to fly 150 flights to clear the queue. And we're going to assume first in, first out. So these 600 customers with their $80 million in deposits, presuming they all go through, it's going to take a while for them to clear those out. Now, they're not going to be able to do that profitably, we can presume, because they've recently upped their prices, and one could only assume they would up prices because they weren't able to capture the margins they promised. So with around 4 flights in 2021 and a trickle of revenues, they are not doing anywhere near what they said they were going to do. Now, the other problem is that they've nearly doubled their prices, and that's not the value proposition we read about in the SPAC deck. We read about how they were going to be driving prices down, giving everybody an opportunity to go into space. So here's a breakdown of what the high net worth individuals around the world look like. So Virgin has estimated that a high net worth individual will spend 1% to 1.5% of their wealth on an experience. Okay, that's what they research that they've concluded, and they said that their findings are similar to that. So in order for Virgin Galactic to start targeting millionaires next door, the bottom tier of that, they need ticket prices around $10,000. So if you're going to target all the millionaires, so what makes up 90% of high net worth individuals, if you're going to target people with a net worth of $1 million to $5 million, you'll need tickets at $10,000 to $50,000, not $450,000 a seat. It used to be $250,000. Now it's $450,000. They're moving in the wrong direction. Here's how they said they were going to reduce costs. All right. So they're not reducing costs, they're increasing them. That's not a good sign. So the whole business model in the value proposition that SPAC was about how they're going to reduce costs. That's not working, is it? They're going to reduce costs in some areas that are quite suspicious. So they're going to build, I guess, better propulsion. All right. So maybe it uses less fuel and there's reusable components. Fair enough. Staff. Decrease per flight inspections and maintenance through improvements in design and testing. You do not want to be having a reduction in inspections and maintenance for something that for flight vehicles that take humans into space. It's already very risky. If anything goes wrong there, the entire business goes kaput. So that's probably not an area they're going to be able to realize too many savings in. And then they talk about vehicle build costs and lifetime and efficiencies and all these bits. These are all areas that require a great deal of research and development money. So they're going to have to spend a lot of money to get there. And as we can see, they're not being very successful in that respect. Now, when we look at this slide taken from the SPAC deck where they compare themselves to Blue Origin, we can see the expected price per seat has now close to doubled. It's up to $450,000. We also see this expected commercial launch timing of Q1, Q2 2020. Well, that blew on by. And guess what? The new commercial launch timing is the end of this year, so Q4 2022. Looking forward, the company's in a pretty good financial position. They have about $1 billion in cash and marketable securities, another $425 million in debt they recently raised. The commercial service, of course, is expected to commence in the fourth quarter of this year. But you just need to remember that the first time something blows up, this whole thing is over. The entire business is going to be in some real trouble. So you're taking on a huge risk just investing in the company if everything were going well. And as we can see, everything isn't going well. And what we haven't shown you in this deck is the share price performance. So we have always cautioned about SPACs, and this one was particularly volatile. And today it's trading at less than $10 a share after trading to some incredibly high levels. So when we value companies, you say, well, is there some value to be had here? Well, the way that we look at valuation takes into account revenues. So we take market cap and divide it by annualized revenues. The problem is that, and we would use the revenues from the tickets, right? The core value proposition of the company. The problem is that hasn't happened yet. So right now, it's really impossible to gauge valuation. This is a $2.5 billion company, so it's relatively on the small side. It's now trading for less than $9 a share. It had traded upwards of $50 a share, so there's a lot of hype surrounding it. And that's the other thing that you need to realize is going on Twitter, taking a look at the sort of banter that surrounds this ticker. There's a lot of manipulation going on with this stock, people trying to trade it in either directions, the Reddit types getting involved, the whole meme stock aspect of things. You'll see people with these little icons in their Twitter profiles, and Atom represents their passion for quantum computing, and the little rocket represents their unwavering commitment to whatever space stock they've put their life savings in, and they need to cheerlead to success. So there's a lot of manipulation happening. So don't expect the share price to behave in a reasonable manner. Expect loads of volatility. Now, to conclude here, SPACs are already risky, but space SPACs are extremely risky. So you can expect a lot of volatility around this stock. It's a very small firm, and it's moving in the wrong direction in every aspect, in terms of the cost per ticket, in terms of when they expect to start sending people up into space, in terms of the progress they're making clearing their queue. So, you may find Mr. Branson as compelling as we do, and you may find that the value proposition is very exciting. Everybody would love the idea of going into space. Tourism is a very sexy topic, but this stock isn't something we would ever consider investing in. So thanks for taking the time to listen to this presentation. Make sure you subscribe to our YouTube channel. We'll be talking more about space stocks in the future, along with other disruptive technologies. Thank you very much.